Welcome to FFRidA. FFRidA is a German SAP business community for finance and risk insurance. My name is Matthias Bayer-Grandisch. I'm working at Customer Value Sales SAP Germany. I'm your contact person for FFRidA. My guests are today Louise Cook, Managing Director Nexontis, responsible for development of finance and risk solutions, and Christian Kupper, Solution Manager Finance and Risk, Insurance Business Unit SAP, responsible for business requirements.
Okay, thanks Matthias for the introduction. As said, my name is Christian Kupper, I'm in the solution management, and I will give you a rough walkthrough to the process of getting compliant with IFRS 17 in using SAP Accounting for Insurance Contracts, our solution for IFRS 17. In the solution management at SAP, we've been watching all these challenges in finance and risk for quite a while. So one is solvency, risk-based capital, local compliance requirements. IFRS 17 is one of the key things we are watching since a couple of years already. Another thing our clients have to deal with is the IAS 39, IFRS 9 transition with the impairment for expected loss rules, insurance statutory reporting, and other requirements, management reporting for internal, external addressees. When we look at all these things from a software perspective, we make up our mind which roles do existing systems play, like the general ledger. What role does Actuarial Systems have in IFRS 17? Can all this be done by a data warehouse? And so on. What's the right software architecture for all these challenges, and how to approach also the overlap of all these challenges in between? After discussing for quite a while, we made up our mind, okay, it cannot be solved in a data warehouse because a data warehouse is not an accounting system. The same more or less applies for actuarial systems. They have their well-known purpose for doing the simulations, providing the cash flows and so on, but actually actuarial systems are missing the last mile of accounting. Also, it should not be put into the general ledger because the general ledger has its purpose to produce a balance sheet, P&L, and here this idea is to have a sub-ledger where you have all the details, and in the general ledger only the most relevant things. So discussing this over a month also with clients, basically we come up ending in a sample target architecture in finance and risk. So at the bottom you see basically all the core systems, your investment systems, your policy management systems, the claims, and so on. Maybe things like real estate. On top you see basically the general ledger and everything that comes after it in the process chain, like planning, consolidation processes, budgeting, statutory reporting, and so on. All that goes together with SAP's wider reporting approach, the digital boardroom to run live business with data out of all the different areas you see. With now the Insurance Analyzer product family, and yes, it's not a single product, it's a family of products. We basically fill this space between the operational world and, let's say, the group or the wider finance functions for general ledger, planning, and so on. So in here we have 4 different products these days. One is accounting for financial instruments, which takes care about the accounting for the asset side, including also the new impairment functionality. Accounting for insurance contracts, which is actually the sister product, which is our central subledger for IFRS 17 purposes. And the tools number 3 and number 4, the solutions are more around this area of finance and risk calculations, while the other tools are subledger, they are accounting purposes. So here we have a tool, an infrastructure called SAP Performance Management for financial services. This are we using to calculate the capital requirements according to Solvency Pillar 1. In some geographies in the world, they have own risk-based capital requirements set up. And the 4th use case here is cost and revenue allocation, means It's about performance management on single contract level, so to determine what's the profitability of a certain customer, what's the profitability of a certain sales channel. So it basically does cost carrier accounting on the lowest level of granularity. All these products have something special in place. They have this green layer, which is indicated on this slide, in place, the so-called Finance and Risk Data Platform. The Finance and Risk Data Platform goes beyond a classical data warehouse because it's built with the DNA of an accounting system, means everything is historized, versionized, nothing is overwritten. You always can go back in time. So accounting is about history writing. And with this green layer, which we introduced in here, we ensure everything, all the processes, all the calculations are stored and can be handled in an auditable way. This new layer, this new architecture, when you think of a finance transformation, what does it mean for the architectures in insurance clients? It changes a bit the approach. For 20 or 30 years, it was best practice to build systems that have accounting functionalities in place. SAP did it. Our competitors did it. So basically, usually you have live systems, P&C systems, or asset systems that have a subledger accounting functionality in place. At the end of the day, they interface the general ledger. So this changes a bit. So with this new approach, we go towards a central subledger solution. So our IFRS 17 solution basically can be put into an architecture without touching the policy systems for life, P&C, or the claim system. So basically, it allows you not to touch your legacy systems. So many of the clients have 50, 100, or even 200 policy systems in place. So it would not be wise to teach all these systems how to do IFRS 17. Now we go and say, you do not need to touch your systems. We introduce this central platform layer that interfaces the GL. It can interface the newest version on S4. It can interface SAP's classical GLs or even non-SAP GLs. One important point, this platform is very strategic for SAP. So we have our own solution on top of this platform, but we're also open for partners or even clients that build their own solutions using this platform. I'm thinking of things like local statutory requirements in the countries where we from SAP said this is not what we handle centrally from Waldorf on. Here we're open. It's a platform that's very strategic for us. And that's also some kind of the introduction to my first summary. So this platform can really adapt to insurers' processes, so we can handle different levels of granularities. I know the standard requires to do things on portfolio level. Maybe there are other gaps that require to do things on a single contract level. So here we can provide different options depending on the insurer's requirements in here. In addition, we can adapt to group structures. So the insurance analyzer is a multi-entity, multi-gap, multi-currency framework. So here, IFRS 17 can be driven in different countries, different currencies, different languages. That's SAP's DNA. And we can support a centralized or a decentralized infrastructure. What does it mean? We have some clients that are very centralized, that have an organization is very centralized. So basically, they could have one insurance analyzer, one SAP accounting for insurance contracts, and all the local entities can be interfaced using that, passing it on to a central general ledger. Or we maybe have more decentralized organizations, so all the clients all the countries can have their own insurance analyzer, which is feeding either local GLs or a group GL. So there are different architectural setups possible now. As you know, IFRS 17 was shipped in May on May the 18th, 2017. We get in interaction with a lot of clients these days. So here we see basically everything from very decentralized to very centralized. The architecture is flexible to do this. And in addition, no one is starting really from scratch. We can adapt to existing IT landscapes. So I mentioned it already, the existing legacy systems, but many of the clients have done something already for solvency. So they're saying, we have a central data warehouse which we built for solvency. Can this be used to feed Insurance Analyzer for accounting purposes? Yes, it can. We have discussed that with many clients, and as well, especially in some geographies where where clients have non-SAP general ledgers, so the Insurance Analyzer subledger can also feed a non-SAP general ledger. And of course, cloud is all along the press. SAP is advertising itself as the cloud company as well. Yes, we can offer Insurance Analyzer in a cloud offering as well. We already have 2 clients who have chosen these options here. But now getting a bit more precise, having a closer look at how to get compliant to IFRS 17 with Insurance Analyzer. So on the left side, you see basically a more detailed picture compared to the one I had in the introduction, where I would go through it from the bottom left. So basically here we have all the input systems, like the asset systems, the liability systems, and in addition we have data providers for interest rate curves like Reuters, Bloomberg, or another one. So basically here we would feed everything we need to the green layer, to the so-called source data layer, where we store all the input data. Everything gets a timestamp, and insurance contracts, financial positions, financial instruments, market data, interest rate curves, and so on. Everything is stored, gets a timestamp. Along the versioning concept, if something is changed, it creates a new version, so you always can go back in time in this green layer in here. On the right-hand side, I will go through that a bit more in detail. A very important step is the interaction with the actuarial systems. So here we foresee to receive cash flows, earning patterns, and other things from the actuarial side. We store it as well in the green layer, and based on this data, all the processes on top will run. It can be IFRS 9, IFRS 17, solvency, and so on. So as said, the green layer was built with the DNA of an accounting system. So on the right-hand side, you see some of the advantages you get with the green layer. The most important thing is really this audit trail versioning thing. We come up with a data model for assets and liabilities. Means if you download it, it's not empty. You will find patterns, templates for assets, financial instruments, financial positions. So you find how to model a bond, how to model a stock or some derivatives. As well on the liability side, our data model contains patterns for life insurance, non-life and reinsurance treaties, and many, many other things in the thing. We come up with a layered approach, so it's a very granular, very flexible framework, and everything is based as well on business transactions, so the feeder systems can send different transactions, and the Insurance Analyzer can do some processes along it. The whole data model comes with several thousand key figures and characteristics in, so it's not empty. You do not start from scratch. Of course, it reduces the total cost of ownerships. As I said before, you do not need to teach all your policy systems on how to do IFRS 17. You have a central instance, a centrally governed instance, a central place where you feed your GL, and that already helps to save cost with that. Getting a bit more precise, so what happens in the process around IFRS 17, the first step is to load data. So basically, the insurance contracts are loaded to the green layer. In addition, you get business transactions like a claims payment, a premium payment through an ETL process to the green layer for processing. The second step, now we need all the actuarial data in. So basically from a actuarial tool like FIS Profit, for instance, we would receive the cash flows that can be on portfolio level or even contract or coverage level, depending on how you're calculating your things. It depends from geography to geography. We found out. So we store all these cash flows. They get their timestamp, and now we have everything in the green layer to process the contracts. Now, the first step, IFRS 17 speaks from initial recognition, means this performing all the processes that are relevant if a contract is for the first time subject to IFRS 17. Here we take all the cash flows. It depends on the product, the sales product you have. Is it a building block approach, premium allocation approach, a variable fee approach? You have to perform different tests like the onerous contract tests. All that happens here in step 3 in my example in the process and method layer of IFRS 7 of our solution for IFRS 17. Once everything is completed, we write in a 4th step, we determine all the debit and credit entries. We do everything which is needed and relevant for subledger accounting. We store it again in an auditable way. And last but not least, of course, we interface the general ledger. For those clients who have SAP General Ledger, it feels like working in one solution, so you can drill down from the general ledger to Insurance Analyzer as well, as you know it from other subledger systems at SAP. Now, looking at these 4 steps in a more detailed way. So here on the right-hand side, you see an example for the timestamps and the historization. So you see basically this policy has been changed 3 times by 3 different users. Of course, in real life, it would not be changed by a user. The policy system would send a business transaction of the change, or would send a new contract. In here, in the middle and on the right, you see our hierarchical data model. So basically, you have templates as displayed on the bottom right, which are there for different types of products. You can change it, you can adapt it, and the most frequently asked question is, can I put additional characteristics? Yes, you can. This template is, let's say, our suggestion for you. You can use it, you can change it, and you can enhance it. You have a multi-dimensional thing, so you have one policy that can consist of more contracts. You have 1 to n coverages in, or you could even go one level deeper to sub-coverage level. Step 1, as mentioned before. Step 2 would really be to load actuarial data, and this is the most, I would say, the most critical process in the discussion. So the insurers have to go through a finance transformation project. All these discussions internally, finance and actuarial worlds have to come closer together. They have to discuss and so on. During all our discussions we had when preparing for this, we found also that this is the most difficult task in this, so in aligning with the actuarial side in here. We found out early we should line up, we should come together with an actuarial provider. We need to talk it from a software perspective level around these processes. And that's the reason why we teamed up with FIS Profit. So on the bottom of the slide, you see our press release that was just announced some weeks ago, that we team up, we collaborate with FIS to help the insurers to navigate through IFRS 17. And basically what we found out in the early discussions, of course, there are basically 3 types of processes, and they are indicated here on this slide. So basically, some processes are clearly actuarial owned, like the actuarial model design and actuarial model execution. This is really the task of the actuarial side. Then on the other side, you have processes that are clearly finance owned. So it's mentioned as event-driven accounting, means the accounting anytime an event happens, like the premium payment comes in or a claim is paid out, that's accounting-based, or that's accounting-owned. Or key date-based accounting, so everything that happens at the date of the closing, so your quarterly closing or your monthly closing, you have to perform several steps. You have to interface the general ledger, create the general ledger document. So this is a clear task where we say this is clearly accounting owned, and that's usually also not covered from the actuarial system tools. But there are other processes like the model point generation, for instance, or actuarial model execution, which are not so clear located in one or the other area. One example here, really, the model point generation. Here, the insurance analyzer, the green layer, can provide model points for claims triangle creation or for cash flow data to the actuarial side. There might be finance processes when you think of execution, like a planning and forecasting process that requires actuarial data. So actually the finance process would start an actuarial process in here. So basically all this we're discussing with FIS these days, and we're discussing that with clients as well to help our clients to navigate through this IFRS 17 journey. In addition, of course, behind the scenes, we are aligning on data formats to see, does our data model in the green layer, do we have everything to communicate properly with the actuarial side on the other side. Okay. But that's a separate session, so here we can talk for many hours around this. Going back to our IFRS 17 process, so the first step is really the initial recognition. Means depending on the contract, you have to perform the rules for the building block approach, for the premium allocation approach, or for the variable fee approach. And here just a simple example how to translate all this into debit and credit entries. So the first step is you have all the different cash flow categories of the future cash flows. Means you have the premium, you have guaranteed benefits, you have acquisition costs, and so on. So all these cash flow components are delivered from the actuarial side. They are stored in the green layer, and in a first step you have to take these cash flows. The block 2 means you have to discount it with the current interest rate. That can happen in SAP or in the actuarial system. In addition, the actuarial system will provide a risk adjustment, and all these components together have to be then translated into debit and credit entries to calculate the so-called contractual service margin, means the expected contract profit at initial recognition. And here these T accounts shall a bit illustrate how that looks like in general. So the residual of all these debit and credit entries, here you see, is the contract positive or is it negative? If it's negative, it has to go through P&L directly. If it's positive, you have to build up this initial recognition and proceed it over time. And if you look at this posting journal on the next slide, we will show this to you in the system in a minute. You see all these debit and credit entries that have been calculated by the system. They are carried over time with all the components, and component is the keyword here. I mentioned before, the system is very flexible. It works with calculation procedures and business transactions and so on. So here you see on the screenshot on the left-hand side, you see there was a calculation procedure performed for the initial recognition, and this calculation procedure can have several steps. So the first thing here was the component valuation, means everything that I mentioned on the slide before. On more the right-hand side of the screenshot, you see that the GL accounts have been determined automatically. So depending on your chart of account, the system can be configured flexibly to the posting rules and then used subsequently. Yeah? So it's about 10 debit and credit entries right now. Unfortunately, this isn't it, because in the next closing procedure, there's something called the subsequent measurement. This can be the next month or the next quarter, depending on the closings you're doing. And then the game starts again. So you start to load new data, so you get new cash flows from the actuarial side. Maybe the contracts have been changed, the duration has been prolonged, the claims assumptions or the mortality tables have changed. So you get new data. From the tools on the one side, and of course you get changes in assumptions like the mortality tables, claims assumptions, or new patterns from the actuarial side. Then in subsequent measurement, you have to perform more calculation procedures. So the rule here is to take the contractual service margin from the last period, then to do the interest accretion, to do the accrual, to do the deferral, and then to post favorable and unfavorable differences inside these cash flows. And at the end of this procedure, you have a new contractual service margin. And of course, you post again to the general ledger. And in details, if you look at the T accounts, it looks a bit like this. So the first step based on the current legislation was to do the interest accretion in a first step, then to do the deferral in a second step, and then check for changes on discount rate change. There will be a swap with the final standard. Accrual and deferral will be swapped. We are doing this right now. And if you look at the posting journal again, you see a lot of more postings and you see a lot of more calculation procedures in here. But this calculation procedure now here was performed for subsequent measurement. And you see it has all these calculation steps inside. So the interest is accreted before we do the deferral, and we check for discount rate changes. So all that is done in an auditable way. Everything is stored in here. And to show you a bit more than I can do with this screenshot, I would hand over to Louise, and she prepared a little demo for you to show you this in the system right now.
Okay. Then thank you, Christian. I wanted to take a chance now that we walk a little bit through the system for the solution that we're talking about today. The first one I wanted to start about was the Finance and Risk Data Platform. So we said earlier that the process for IFRS 17, it starts with loading data from source systems, then it moves to loading data from actuarial systems. From there we run the initial recognition, and from there we run subsequent measurement. So we start now with the first step, which is to load the data from the various source systems. And here what I have is just one snapshot of what a policy can look like in the system. What we can see is that our pre-configured policy, it generally has 3 hierarchy levels. So on the left-hand side of the screen, we see one policy, which can have 1 to n contracts, which can have 1 to n coverages. This is the general idea behind the policy template. We see on the right-hand side that we have a number of attributes that we can fill, and indeed some of them we need to fill in order to be able to run the IFRS 17 processes. For example, we need to understand in this field, is it a policy or is it a treaty? And in a different attribute, we will also look at, is it an assumed treaty or is it a ceded treaty? We also record, for example, what the source system is, because we can have multiple source systems providing data. Through the tabs at the top, we also have the ability to add to this also partner data, so for example, who the insured person is and other business partners. And if we move, for example, to the Attribute tab, here we can see additional information that we also need. For example, in this case, a sales product. What's also important here is that we do have two-dimensional versioning, so it's always possible to understand the information contained in a policy at any point in time. So we have here 2 fields that are important. For example, the business record date, so at what point in time does this record become valid? And we have a system date and time, so we can see when the record was updated. The next thing I'd like to show you is the actuarial cash flows. So as step 2 in our process, what we do is to upload the actuarial cash flows. And here what we see is also this information in the system. What we see is we have a key date. This is the date at which the cash flow projection itself is valid from. It is assigned to a legal entity. We have also the relevant dates that describe how the projection runs. So these are the dates that tell us at what date in the future is the amount then related to. Then we have two fields that help us understand what is in the cash flow. I have one field here that gives me some kind of portfolio identifier. So what we're looking at right now is a portfolio worth of cash flows. It is possible to provide variations on this. And another important one is then the flow type. So what type of cash flow am I looking at? Do I have a cash inflow? Do I have a cash outflow? Is it a premium or is it a claim? This is the information contained here. On the right-hand side, then we also see the information about the amount. So this is, at this point in time, we have an amount of 100 euros recorded in the projection. So based on this input information, what we can now do is to run the processes, initial recognition and subsequent measurement, and the output of those processes are ultimately posting documents. So we can now take a look at the posting documents to see what they look like also in the system. And what we can see here is for the test case we have, what is important to note is here I have run firstly an initial recognition process, so I can see that in the system. And what does the initial recognition process produce? At the end of the day, what it gives me is a general ledger account where I will be posting to. It gives me what we call a posting key figure, but this is ultimately just a sub-ledger account, so one level more granular than a general ledger account. We can see whether the record is a debit or a credit, and we can see whether it is an asset or a liability together with the associated amounts. And here we calculate values, for example, the most important one being the contractual service margin. If we scroll down a little bit further, we can see also here that we move from the initial recognition at the beginning to a subsequent measurement. And the subsequent measurement in this case, we have a quarter close, so this is the end of March. We run here a building block approach in this case, and we can see the different steps that we run through. So we have the first step we see is the deferral, so this is basically the amounts that are produced due to the passage of time. We have an accrual, which is the calculation of the interest accretion. We have a discount rate change, which gives us the discount rate amounts and posts it also according to which accounting rules you have chosen. And we have what we call a component valuation as well as the onerous test. The component valuation itself is then the calculation of any changes due to change in estimates. So also here for the subsequent measurement step, we can see the results. We have a sub-ledger account that we've posted to, a general ledger account that we've posted to, the debit credit, liability or asset indicator, and also an amount. So the table that we're looking at today, right now, it's very much an accounting view on the world. What is then possible using SAP technology is that we also make these results visible to a presentation layer and even to a digital boardroom, which allows then also the executives and other decision makers to really make decisions on the results that are being produced near real time. So that was what I wanted to show you in the very short system overview today, and right now I'll hand back to Christian. Thank you.
Thanks, Louise, for this comprehensive demo. I hope you could get a feeling of how the system looks and feels like, and really we are there already. You can test it today. We have signed up some clients already, and we see a lot of increasing demand since the standard was published this year. In the development planning, we plan to update the business content to the latest rules. So our rule of thumb is to do this approximately 6 months after the final standard. So our promise is to get support packages by the end of the year, with then the latest adoptions with the changes in here. Leaving the subledger for a moment to look how does it look in the general ledger. So on the left side you see the latest version of our S/4HANA general ledger with the new HTML5 based user interface for Fiori, so you can display that. If you prefer the classical view on the right hand side, you always can drill down, so the general ledger experts, you will recognize it. You can check the debit and credit entry. You can drill down to the original document, to the subledger postings you saw in Louise's presentation, down to the business transaction, or even down to the contract. So for finance people that are running through an audit and so on, you always can go up and down. So just to summarize, and I hope that went clear through the session, so our solution is a combination of software functionality. We have this framework with all these calculation procedures, calculation steps. It can be easily enhanced. But on the other side, we also have business content, and I think that's an important differentiator towards our competitors. It's not an empty framework. We come up with the data model, we come up with the posting rules. You all can change it, but it's not empty. You do not start from scratch. In addition, I would like to take you one step further. So now we have done all these things for IFRS 17, and basically if you look one step further, what can I do with all this information, and what can I do with information on the lowest level of granularity? Yeah, so today, in these days of HANA, big data, and so on, performance is not an issue anymore, and also the storage of data is not that an issue anymore like it was before. So now we can allow us to store things on the lower level of granularity. And if we look at processes like controlling, management, accounting, and so on, usually things were limited by capabilities. So you had cost center accounting, you had cost carrier accounting, but usually that ended on the level of cost centers or business units or maybe product types. I'm sure you're all doing this, but usually everyone is doing this with the limitation of today's technology. Now with the new technology and the new processes and methods, we have the possibility to do things on a lower level of granularity, means on contract or coverage level. And that exactly was when we were approached by a client. It's a very large insurer in Asia, dealing with 30 million policies and 120 million coverages. And they said, I want to do controlling, performance management on single contract level on each coverage. And basically, so this product was born out of a development cooperation with this client. Basically, taking the assumptions, you get better insights if you use a more granular way. And that was the first use case, cost and revenue allocation. Meanwhile, we have used the same framework, which is very flexible, for additional things like Solvency Pillar 1 calculation. So it can be used for any type of finance and risk calculations. It helps to change the level of granularity. Imagine you get portfolio data from the actuarial side. You want to go down to single contract level, or reallocate things in something like an IBNR reserving process. Maybe you need to build portfolios, assign the IBNRs, bring it back to single contract level. That allows different allocation models in here, and the first use case I mentioned with this insurer. So what they did actually, they have direct flows like the premium, the claims, and so on, but they also have 500 different cost items from CO, like cost of sales, cost for the building, cost for IT infrastructure, and so on. And they use this framework to allocate this all down according to rules, to single contract or coverage level, and then to reallocate it. And basically, this reallocation allows them to get super fast insights on all these things that are displayed on the right-hand side, like how profitable is a certain client, how profitable is a certain sales channel. You could use it for, if you have a shared service center for IT, to allocate IT costs to your entities. It's very flexible, and it allows to get an additional dividend. Now you're there, and you had to interface. You had to did all these steps to fill the green layer and to perform IFRS 17 on this infrastructure. You can do the same. You can do performance management on single contract level. So just to summarize it these days, so thanks for your attention for our IFRS 17 session today. Just to summarize it in total, so now SAP can be your partner. Now we bring all the technologies to run processes on the lowest level of granularity. We bring business content for the major global standards like IFRS 17, IFRS 9, the posting rules. We are integrated to our existing systems like the SAP General Ledger. You have extractors to the SAP Data Warehouse. And we bring a world-class partner ecosystems because IFRS 17 is a very large task. It's most likely that no one will do it alone. You have partners like the big consultancies, actuarial providers, specialized technology providers. All these need to come together, and here SAP can help you. So thanks for your attention. See you next time.